Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money, if possible, on the internet. Loaded up for discussion today, we have Solana continuing to outperform as 6 of the biggest top 100 coins on a 7-day basis. The biggest gainers are all on Solana. AI meme coins, virtuals, and Luna rocket on AI agent hype. Sammy and Legendary have been deep in those AI trenches. Going to be giving that explainer in just a little bit. And DAO Dot Fun goes viral with top DAO AI 16Z market cap is at $44 million. We'll be exploring what's going on there in the DAO universe. We've also got the latest on price action on crypto and NFTs and a discussion on Bitcoin's limitations with Bread. So stay tuned for that. Today we got a full house. We've got Legendary Sam and Bread in the co-host seats. We're ready to get into it. Just a reminder, friends, before we do that, nothing that we say here is financial advice, because this market is very, very risky and we don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Monday. It's the 28th of October. It's supposed to be your day off, but you are here. What on earth are you doing?
GM, look, it's Monday. We're running the show 1 hour earlier. The reason that I'm here, though, is the topics today are just too good. Like, we talk about all the AI trenches that I've been spending my time over the weekend in nonstop. And I DM'd you before the show. I was like, look, we have a fixed schedule, but is it weird if I turn up today? And we're like basically trying to, you take a day off, me take a day off throughout the week. And you're like, actually, no, there's no reason to not show up. So here I am, nothing else to do. And, topics that I've enjoyed very much over the weekend. So definitely excited for the show.
Good. I like it. Just throw the schedule out the window and just go for it. I like it a lot. Sammy, how are you doing?
Yeah, exactly the same. Just AI trenches, AI agent proliferation over the weekend. So yeah, I've been deep into that. Tried to touch some grass on Saturday, but got dragged back in on Sunday. So yeah, excited to get into it.
Okay, I'm very, very grateful that we have such a good team around us, because this was one set of 48 hours that I was definitely away and not like in the trenches and knowing what was going on necessarily. Came back, or started to log back in Sunday evening and just had no idea what was going on. So I was doing a deep research this morning, trying to get up to speed. Things were as you say, proliferating pretty quick, Sam. So yeah, we're going to get into all of that in a bit. Bread, how are things your side? Are you proliferating as well? What's going on with you?
My conviction is monk-like and avoiding the trenches. I am just sitting here watching it and it's going, I don't need it. Not me. Although I will say, I've saw a couple tweets from like Muzzy, Muzzy Vermillion, and like even Arthur, Defiant Capital, who's just like, look, dudes, lock in for like 2 weeks. Like, it's about to get really weird for 2 weeks, make some money and do whatever. And I'm just like, I know I'm the exit liquidity if I go into that arena. It's not my arena. Everyone else will make my money. That's why I'm avoiding it. So I'm watching it. I'm resolved to just see it pass by and enjoy it.
It's just 2 weeks, Brad. It's just 2 weeks. It's not a big ask, is it? 2 weeks? 2 weeks of your time?
2 weeks of hair pulling, like upside down, 3, 4 in the morning, like just craziness. I got enough going on in my life. I'll just stay the course.
But to Brett's point, though, I think it's not going to be humans taking our money. It's going to be AI agents taking our money. So I think we're all going to lose eventually.
But we can simp for the AI agents and they're going to pay us.
I thought that was didn't Legendary literally DM us on Saturday morning at some ungodly hour saying, should we seed an AI agent? Like, is that what happened? Is that like, this is already past the point when I'd already logged off for the weekend.
So that was like virtual protocol. So you can launch an influencer for about 50K now. It was about 30K when we were looking into it, but the price of virtual went up so much it got expensive. I think it's 125K virtual. But there are other ones now. It's like DAO Dot Fun, and there are other platforms that you can launch an AI agent. So we'll get into it, I guess.
All right, Bread. Well, maybe it doesn't need to be you, right? It can just be Bread 2.0.
Yeah, if I do anything, it's like I saw Base's smart wallet. You could launch your own agent with Replit and stuff. It's like, cool. Yeah. I'll do some of that dev stuff, have some fun. But like, no, I'm staying out of the Ponzi's.
It's all a Ponzi, Brad. It's all a Ponzi.
Ponzi games. They're all Ponzi games, and we love them.
We do. Look, kind of touching on all of the more complicated stuff that was going on over the weekend with the AI stuff. We're going to get into all of that and more in just a little bit as we get into today's headlines. But first, let's get to the usual price action and headlines to give you a sense of what has been going on over the past 24 and 48 hours over the weekend. So starting with the price action, Bitcoin is down almost a couple of percent at 66.5K. ETH's down 5%. Am I looking at that right? ETH's down 5%. Oh, no, it's not. I've just refreshed. Everything that I just said was wrong. Bitcoin is up 2% to 68.5K. ETH is up 2% as well to 2.5K. And Solana is up 2% to $177. Some headlines for you. Solana continues to outperform as the 6 biggest top 100 coins were all on Solana in terms of their 7-day gains. That's Goat, Ray, Mu, Popcat, Solana, and Jupiter. AI meme coins, Virtuals, and Luna rocket on AI agent hype. Sammy wrote a great thread, which he's going to break down in just a little bit. There was AI16Z, which soared 20x to 90 million after a Mark Andreessen post, and DGen AI also jumping 750% to 26 million over the weekend. As I said, Sam's going to break that down in a little bit. DAO Dot Fun goes viral with the top DAO AI16Z market cap at 44 million. This is more interesting on the product side, which Brett is going to break down in a little bit, where it seems to be the case you can kind of enables anyone to launch DAOs and trade meme coins with a twist. So it's kind of like everyone being an investor into a fund and then allowing someone to go and deploy on your behalf. So we'll break that down in just a little bit. Pretty interesting stuff. Some notable sales from around the space. CryptoPunk Cap selling forward facing Cap 35 ETH. Pudgy Penguin Wizard 18 ETH, and Rafiq Anadol Winds of Yawanawa on the art side selling for 5.69 ETH. Those are the headlines and the price action. Legendary, do you want to tell us what's going on in the NFT market?
Yeah, absolutely. Let's take a look. Bored Apes basically flat over the last 24 hours, sitting at 11.54 ETH floor. However, over the last 7 days, they have corrected down 10%. Pudgy Penguins, they're up 1%. They're at a 9 ETH floor, down 4% over the last 7 days. So moved quite a bit away from the 10 ETH floor that they were holding for a long time. Azuki's also in the red, down 4%, down 8% over the last 7 days at a 4.8 floor. Miladys are down as well. They are down 3% over the last 24 hours, down 16% over the last 7 days, sitting at a 4.2 ETH floor. In terms of some other collections, it is, again, the meme collections that are moving a bit more. We have the Apo collection, which is up 46% over the last 7 days at a 0.22 ETH floor, getting significant volume, getting 200 ETH volume over the last 24 hours, also dominating the OpenSea charts in terms of volume. And then if we take a look at Magic Eden, so that we can see the ape chain side of things, we have a couple more collections there, like the one that I'm sharing on screen, Monkeys, which is up, I think, 400% in total the last couple of days, and currently sitting at a 235 ape floor. So definitely a bit more of a mimetic degen activity going on across chains, and quite similar or quite connected to the topics that we're going to touch on. There's AI agent related collections, specifically on Base, like on-chain Gaias, who've been moving up from 0.5 ETH to 0.7 ETH. So definitely the sentiment that we see in meme coins is pretty much mirrored in the NFT market as well for the moment.
Okay. A lot of that meme style NFTs moving quite aggressively. Want to reflect on that in just a second as well, but let's just do the Web3 roundup to get everyone up to speed with everything else happening. Too, in other news around the space, Hong Kong eyes tax breaks for crypto investments. The block said that the Hong Kong government's treasury chief said the city will extend existing tax concessions to cover cryptocurrency investments by the end of this year. Tether also revealed financial reserves once again. They announced $3.87 billion of Bitcoin and $100 billion of US Treasury bonds. That's consistent with the story they've been telling for a while. FTX reaches a $228 million settlement with Bybit, which allows FTX to recover $228 million. So that's $175 million in cash, I believe, and then $53 million of BIT tokens, which they will be able to sell to. Sorry, they'll be able to sell those other assets to Bybit's investment arm Mirana for 53 million. Emory University discloses $50 million of Bitcoin holding, more institutions kind of allocating towards BTC. As Legendary already mentioned, Apu NFTs from Murad's list sell out and trade at a 0.2 ETH floor. Chimpers, on the other side, on the UK side of things, launched Halloween card pack sale today for a chance to collect 17 cards and chance to win one physical arcade machine. A lot of pack ripping going on. Doodle's obviously doing something very similar in general. And Coinbase launched Based Agent, which Brett just mentioned, a way for you to set up an AI crypto agent in under 3 minutes. Sounds pretty interesting. They say the goal is to make it as easy as possible to start building your own AI agent. You should be able to do that with under 3 minutes, so long as you have a crypto wallet. Legendary, that is the roundup. That's all of the news for today. Before we get into a bigger discussion on the specific headlines, the big stuff going on, anything catching your attention from some of the smaller bits? What are you interested in?
Yeah, I'm not going to go into the AI topic because we're going to cover it extensively throughout the show. I actually found the Emory University news pretty interesting. A, because I had almost studied there. It was like in my short list of the 2 universities that I wanted to go to in the States. And B, because the educational sector is still important, right? As much as we kind of like to make fun about universities in the space and basically say nobody needs to study or anything, it is interesting to see that at least one university has disclosed that. We don't know about others who might be holding BTC as well. But it's interesting to see not only the institutional sector, but also the educational sector jumping on it and being like, we want to have skin in the game. We want to have exposure when it comes to BTC.
Didn't that happen with retirement from Canada? Wasn't that a big thing last cycle? Or a retirement fund from Canada, the Canada Teachers Fund, bought a shit ton of crypto and then
didn't that implode? Yeah, exactly. That imploded. But I think there's been Wisconsin pension fund as well has gone into it recently. I think that's this cycle though, rather than last cycle. But there are definitely institutions coming for your BTC.
Yeah, good additional context. Definitely the pension funds I've heard of this year. As Sam said, the Wisconsin one being the main one, I think. Sam, what about you? Any other bits of news here that's kind of catching your interest? Anything on the NFT side as well?
To be honest, it's been the AI stuff. So like Legendary mentioned around the on-chain guys, so I'll probably just pause there and wait for us to get into the AI stuff specifically.
Okay. Well, we're going to get into the AI stuff. That's what you'll definitely be waiting for. It's the main events over the weekend. But before we do that today, we're going to get into our weekly bread tech segment, aka breadcrumbs. Follow the breadcrumbs to get to the alpha that you need. Brad, today I believe you are speaking on what we were just speaking about, on Bitcoin and maybe some of its limitations that people are trying to put under the carpet for now. But I'll let you take it away.
Yeah. You guys squeezed this one out of me, so I'll finally do it. So this is my conspiracy theory. People don't like to hear it. I'm skeptical of Bitcoin's future, and I'm going to lay out the rules for why that's the case. So yeah, okay, bread tech breakdown. We're going to tackle some complex technical stuff and try to distill it for you guys. So the subject is Bitcoin specifically, and how I think, yes, it's the leader right now, and somewhere in the distant future, we'll say 10 years, 15 years plus, it has a real problem. It's not a mystery. It's just something that's kind of been like, oh, it'll solve itself. And that problem is ultimately how the chain is going to keep its $21 million Bitcoin cap without generating any fees, because it does not generate fees. So backing up a little bit, chains are living systems, right? You have to incentivize people to run the network, to further it, to continue to build blocks, to continue to grow it. All chains have that. The incentives to get people to do that come from 2 sources, only 2. One is either the chain itself gives you tokens for doing the thing, that's the reward, or because you ran the node and did or miner or whatever, you got paid fees from users. Okay, that's it. That's 100% of where this stuff comes from. Bitcoin has one of those 2 things programmatically going to 0, right? So if it goes to 0, that means all of the incentives have to come from this other thing, right? Otherwise, you've lost the incentives to further the network. And I had pulled some numbers just before this. So Bitcoin, again, programmatically is going to 0 with the $21 million cap. That's fine. Ethereum.
When you say it's going to 0, Brad, just to clarify, it's the fees that are going to 0. No.
Correct. The block rewards are going to zero,
The
right?
block
Because it's
rewards are
$20
going
million
to
cap.
zero because it's
Right.
got a
The
hard cap.
halving, right? Yeah,
Correct.
the halving every roughly 4 years cuts in half, and that will continue to do that until it's literally zero at one point because it can no longer issue anything else.
Got it.
That's fine. Now the fees, the other side of that stuff, will have to compensate it in that world, right? To incentivize people to participate, because if people don't participate, it doesn't decentralize the network itself. Right now, the fees in the Bitcoin world, which again is told you don't want to touch Bitcoin, you don't do a whole lot with your Bitcoin, it just kind of sits there, it's gold, right? You don't touch it. Right now, the fees relative to the amount of Bitcoin that's emitted every year or every day, daily, is around 40 million in rewards, and 1.5% is made up of fees from users. Like there's basically no one using it. So there's 40 million from block rewards, and then 1.5% of that is actually is users of the chain. Now, if you look at Sol and Ethereum, they're equivalents to that. The users use the actual chains because they're programmable. Because they're programmable, people play around on it, they do stupid shit, they meme coin, they whatever. So therefore, the fees made on those two chains is roughly like 35%, right? So like 35% of the overall fees are the overall rewards for these miners or node runners, validators, is 35% from users. So you have a little bit of a balance there to compensate for eventually maybe a lower emission schedule or subsidy. So in this world, again, 10, 15 years from now, whenever the actual chain rewards go to zero, if that 1.5% doesn't pick up, or if the price of Bitcoin doesn't appreciate to such a degree that even the lower hard number of what's emitted is worth more in dollar terms, therefore it's like the incentive is still there, you run a point where you can spend X amount of dollars to attack the chain. When I say attack the chain, it means like to get miners to take the hash rate, to be able to like govern the future of the chain, right? To do a 51% attack, you can double spend, you can do whatever. You could do this. And if you get to a point where the amount of money you spend to actually do that, because there's no incentive to actually run the chain, there's no one participating. If I can spend, say, $10 million to make $200 million because Bitcoin is valuable, then it incentivizes me as an attacker to come and attack the chain. So basically, TLDR is in this long-term horizon where Bitcoin is not programmable, you're not supposed to touch it, so there's no fees being generated, and it's not getting paid from the actual chain itself because there's a hard cap. There's a window that is created where people will attack the chain because it's easy to do so, and the amount of money I would spend to attack it is less than how much I would make from attacking it. And people's justifications for like, oh, how will it progress once it hits zero without changing the hard cap is they think people will run Bitcoin miners just to generate heat. They'll do it out of the goodness of their heart to generate heat. It's the fastest way to do that. Or the government, because they have so much Bitcoin, they will run it at a loss to make sure they protect their investment effectively. So you either have the government running Bitcoin, or you have people doing it out of the goodness of their heart to heat their cabins in the woods. And I just don't see that happening.
Okay, so I have one clarifying question, one question about the future, as you just started to allude to it, and then I know Funky's got his hand raised as the resident Bitcoin expert. So first question, just to clarify, there's two issues that you see with Bitcoin's position at the moment, and compared with Sol and ETH, just to clarify for people, is this the case? So Bitcoin is not inflationary. Obviously, there is a hard cap, and it does not generate that many fees relative to the other chains. Whereas Sol and ETH are both inflationary, and they generate more fees. That's
correct.
So that's a very, very significant difference between the two. Therein lies like the challenge of incentives. When it comes to thinking forward, then I suspect like government subsidies and the idea that governments should either promote certain industries and look after particular things. It's not entirely uncommon. I haven't thought about it fully, but what's your perspective there, and why do you think that would not be likely when there are certain industries that might be protected by governments in particular instances?
I don't think it's unlikely, but I think it's antithetical to what Bitcoin is, right? So like, oh, now it's decentralized, the maximally decentralized thing. Everyone can participate. All you gotta do is run a node because it's super cheap, super simple, whatever. However, like the entire thing is run by people who have the capital to actually run it at a loss, right? If there's no longer an incentive for anyone else to do it. And the counter to this is like, oh, well, eventually people will use it either by way of making it programmable, which in that case, like you're no longer you're starting to play with it, right? So you're actually starting to do stuff with Bitcoin. Oh, and then it's like 7-8 years behind developmentally of the actual programmable chains. So the Solanas, the Ethereums, the whatever. It's like none of the dev tooling is there. You don't have it like the builder culture there. It's just behind. So that you're functionally the identical thing there. And then you enter into now you have Ethereum's roadmap, where Ethereum now is in this chasm of like, okay, you don't touch the main chain a lot, and you're transferring everyone to L2s, and you're losing a lot of revenue because of that. So the problem that we just talked about, where you don't have fees, well, that's also going to zero in this chasm of going from L1s to L2s to whatever. So and then or you introduce inflation. You break the 21 million cap just to show you have subsidy, and then you broke the meme with that. And if you break the meme, now everyone's like, why would I hold this? Because the meme is broken.
Sure. I find that really interesting because the way you just framed that was, you can do this, you can generate more fees, or you can break the hard cap. But the realistic comparison with Solana and ETH, which is, I guess, what you'd probably describe as a more functional on-chain economy as things stand, at least, is that they have both. And I think with Bitcoin, it's always like, well, you can do this, or you have to do this. When in reality, like, who knows? Maybe both. If that's the way the on-chain economies work best, maybe both. I want to give Funky a chance to come in on this because I know he is a long-term Bitcoin hodler. Funky, resident Bitcoin expert. What's your question, thought, take for Bread here?
GM fam, yes, and I love you, Brett, but I have to politely push back on some of these points. First and foremost, there will be block rewards for decades, right? Like we have several halvings to go before we ever get to a point where we're relying on fees. More importantly, I think this kind of reminds me of geography when you have this idea of Malthus and like that. Oh, hey, human population is expanding at an exponential geometric rate, but we're only producing food at a arithmetic rate, and therefore people are all going to starve. We're all going to die. And then you had these post-Malthusians who came along and said, you know what, innovation is always going to bail us out, and we will always be able to keep up with human population growth. This is the same exact argument in a cryptocurrency context, right? Because for one, we're not taking into consideration sort of the advancements that are going to come along for Bitcoin and L2s. Like English is listening, right? He's a big ordinals guy. Right, what are going to happen with fees driving up? Because as chain usage, as things get to be put more on chain, whether it's through L2s or BitVM or what have you, theoretically, these fees are going to continue to rise and therefore should satisfy the miners. Now, again, we're both speculating, right? Like Brett is just as I am, because we don't and cannot know the future, right? I understand and take Brett's points with all seriousness. But at the same time, I feel as if that is a significant way off into the future to where it shouldn't be something that we'd be fudding about with Bitcoin now. I'm not, there's a great thread, and I'll try and find it when I'm done chatting. But basically, it was pointing these problems out because as more people do continue to hodl, right? Like as BlackRock gobbles up all the Bitcoin and stuffs it into Coinbase custody, it's not moving. It's not doing anything. It's not generating transactions on the chain. So I understand that point, and it is a very serious point. But I do feel as if with some of the technological innovation, just knowing the Bob team, knowing other teams like BitLayer and Charlie and those guys that are working on these kinds of L2 solutions that theoretically will add some value to the chain, but it could be like Brett points out, could also be like an ETH situation where the L2s are doing all the value extraction and nothing is really getting to the base layer. So I do have to be mindful of that and admit that that's also the potential problem. But I just think long term, yes, this is something that has to be dealt with. But I think in the immediate short term, and by that I mean the next, say, 20 years, I don't really think that there is going to be an issue right now. I mean, hey, and quantum computing could come along and crack SHA-256, and then Bitcoin's totally screwed as it is. So I'll just leave it there.
I totally agree with that. It's like I prefaced that earlier. Like this is a 10 to 15 to 20 year thing. This is not a this cycle or a next cycle thing. It's just something that you need to be aware of going forward. Or I'm staying aware of that. Like it just, I can't participate in that ecosystem because like it doesn't give me conviction. I don't resonate with me. I don't need to make the extra whatever percentage difference. I can just stick to whatever clicks with me and gives me conviction.
Great points, great discussion. So I think maybe the helpful helpful framework there to think about how to make sense of that is via timeframes, isn't it? So the way to achieve some type of consensus or to come to a reasonable conclusion is like putting a time frame on it. So maybe 15, 20 or more years out. That's probably how I'm thinking about it as well. Like when you think of the absolute conviction that a lot of the institutions are coming with now in this cycle, it seems to be absolutely primed. I don't think anyone is worried about this stuff, although I think pointing those things out is probably very wise. And then it will be a can that gets kicked down the road, which someone else will have to deal with another time. But Bread, appreciate the Bread Tech breakdown. We're going to be doing those every single week. Love to get a little bit more of the technical insight as usual. So appreciate that. Let's get into the main headlines. We've got so much interesting stuff to get into. We've got the AI stuff coming up in just one moment. Just wanted to touch on Sol first because of its continuous outperformance. It's over the weekend, Solana continued to outperform 6 of the biggest top 100 coins, which moved the most in 7 days, were all on Solana. They were these coins: Goat, Ray, Mew, Popcat, Solana, and Jupiter. They were the biggest movers. Solana is stronger than anything right now. Legendary, you're going to provide a little bit of a breakdown. Give us some statistics and numbers here to how to think about this. Tell me, please, do I need to capitulate finally entirely from ETH to Sol?
Very, very good question. I can't answer that with a yes because we have Kashmir in the comments saying he's an ETH bull, so I'm not gonna go against it now. All jokes aside, you said it perfectly. We have massive moves in the top 100 coins. Solana is number 5 among those, and also the other coins. If it's the meme coin Goat or the iMeme Goat, if it's Ray as a DeFi, Radium is a DeFi protocol on Solana. All the big moves that are basically outperforming Solana are protocols or memes that are being deployed and are live on Solana. If we look at some additional data from CoinGlass, you can also see that the 24-hour volume for Solana is up massively. It's up 30% to 6.6 bill, without being in a situation where, if you look at the long shorts or if you look at the funding rates, you don't see crazy open interest. So it's not, doesn't look like a leveraged play that is playing out. And there's also a very interesting comprehensive analysis by DeFi Edge, DeFi content creator, very prominent voice in the space. It's kind of looking at what's going on. It's also kind of segueing into some of the later headlines that we will cover, saying that on the one hand, we have more positive sentiment on the timeline, US presidential elections coming closer. Obviously, we all know that on-chain metrics looking very solid with active addresses rising on both Base and Solana. I think also ETH outflows more towards L2s, towards Solana, towards Sui. Also, this very big point there that is mentioned here, I'm sharing it on screen, that this AI X meme intersection seems to form as a new sector, seems to kind of become a bit of the NFTs of last cycle. Obviously, a bit early to call that, but definitely massive interest going on with it. Lasts for, as Sammy said in the beginning, 2 weeks or for longer than that. Doesn't really matter from today's perspective because the activity is happening today. It is moving to Solana. Even if we check the stats, I'm sharing a Dune dashboard on screen from Pump.Fun, just to take a look, not at the cumulative revenue where Dune has surpassed 50 mil, but taking a look at the daily revenue and seeing how strong October has been performing, with basically not a single day where it has been under $1 million in fees generated. Every day is between 1.5 to $2.2 million. So again, another activity, another action point that's happening on Solana. So it does seem that a lot of the activity is concentrating there, which might explain which quite certainly helps to explain the positive price action we're seeing on Solana over the last 7 days.
I like it. Great breakdown. Immediate follow-up question, whether it's for you, maybe I want to hear from Sammy as well on this, and Brett actually. This kind of tying it to the election in some ways. I saw the election mentioned in some of those articles, but this tweet was going, I think, a little bit viral from Nick Carter over the weekend, linking the election and the election result with meme coins. And I think this is the thing. Meme coins are so intertwined with Solana now that a prediction on meme coins is kind of a prediction on Solana in some way. I think that's fair to say. Maybe someone might want to argue with that, but because of meme coins' success specifically on Solana, yes, I know they exist in other places, but that's Solana's killer use case at the moment, amongst other things. So this was Nick Carter's position. Meme coins, in large part, reaction to oppressive SEC regime. If the SEC finds sanity or less desire, so if the SEC finds sanity, there would be less desire or need to trade meme coins. In the sense that, look, say the SEC provides a bit more clarity. You know, you can do ICOs a bit better. You can do capital formation in crypto markets a bit easier. They're not just going after proper crypto companies. Maybe Uniswap and other exchanges can turn the fee switch on. You know, suddenly all of those assets become more investable. Meme coins are less investable. And so in his estimation, a win for Trump would be bearish for meme coins. And I saw other people then extrapolating after this. Therefore, a win for Trump is bearish for Solana. Legendary, since you brought this to the table, we wanted to ask you what you thought of that first. Then we'd like to hear from Sammy.
Yeah, it's an interesting point. It's actually something that also I'm going to share my screen. Elon Musk has been commenting on by resharing posts like the one that I got on screen, where someone says, I think this election might be decided by how many Americans identify with my meme, but also making the point, Elon, that memes, obviously Elon very critical of traditional media, have more like veracity or more like reflection of actual sentiment to them than what is being reported in traditional media. So it definitely seems to become a bit of an information tool. While I like that way of thought to kind of say Trump bearish memes because more positive SEC regulation reduces the need for trading memes and we can trade other things, I don't think that it works in this exclusive mindset. I do think that then maybe interest might flow back into DeFi protocols if we can turn on the fee switches without being worried about SEC crackdowns after that. But I don't think that this would take away massive volume from memes, especially if we think that this AI meme in a section is something to stay around for a bit longer. If we think that's something that will make main headlines, if we have interesting things, if we have huge numbers coming out of Virtual's protocol, for example, that we'll cover in a second, that might get people interested again. I don't think that this will basically be that bearish of a case for memes. Might be a bit of a capital flow out of that, but I don't think it can be reduced to say that Trump is bearish memes.
Okay, I've got some thoughts on that. Sammy, want to hear what you think?
Yeah, I think so. If for instance there's no new net capital coming into the space, then I could see that potentially being the case, where mercenary capital will effectively flow from memes into utility coins, because there'll be more upside if the SEC becomes a bit more favorable in terms of how those operate. But I do think, though, if the fee switches and things are turned on or the regulation changes, then you're going to have a net new amount of institutional capital coming in that will be far above what it is at the moment. So I think there will still be activity in the meme coin space. There may be some that flows out, but I think there'll be some more that flows back in. So net for where we are at the moment, I don't think it will have much of an impact on memes specifically. But I do think that the utility tokens, and we're seeing that with AI, the AI segment at the moment, we'll see other segments like DeepIn or like other commingled segments that kind of have that downstream flow of impact depending on what the utility is. I think those will start to pop off as well, particularly as those regulations are a bit more clear.
I think you can't ignore momentum. Like it's not like, oh, he wins and like all of a sudden like, okay, fuck this, we're out. We're gonna go start doing bidding dexes and shit. It's like maybe dexes like adjacent with radium, but like there's so much mental and psychological stuff that is tied into meme coins and buying into the idea and deploying capital in the space of like now like all of these levels of meme coins that have been stacked, right? You have the pump fund shitters, then you have the 10 millions, and then you have like the 50 million ones, and then like the billions, and like so like you have all of these layers that I would have to unwind. Just like with NFTs, like ultimately now, yes, it's like pretty down there, but like it took
it took years to establish the meme coin hierarchy in the way that Brad wanted to explain it. He has just frozen. If you can't see on screen, it's pretty. You're back, Brad. You're back. I finished your sentence for you. Don't worry.
Yeah, I'm done. Go for it. I'm back though.
Okay, I finished the sentence. It's an established hierarchy. It's an established asset class, I think, and it would be incredibly difficult to just switch. And actually, the thing I was thinking, Legendary, as you were speaking at the beginning, is that if you want that, you know, people are acting like there's no fee switch option in the world. And I know people who are in crypto like to just stay in crypto and they might not like taking their money and going elsewhere. But if you want the fee switch option, if you want the shares in your assets to yield you something, there's always the stock market. Like it's still there. You're allowed to do that if you want to. So I do understand that, like, when people in crypto, they just want to stay in it and would rather the yield come from where they are. But, you know, I don't think the people who have the biggest amounts in crypto have zero stocks as well and haven't got like a balanced portfolio in that respect. Brad, you wanted to say a final thing?
I was gonna say, do you think the attention? So, like, I think all of this craziness may bring on the attention of new participants, and those new participants are too scared to do memes. Therefore, they go to the old things that they can actually understand, right? So, like, all of this action now gets attention from Andreessen and like all this craziness, and people are like, okay, I'm looking at crypto again. I can't do frogs, but I can do DCF models on this other thing, and that's where they deploy their capital.
100%. I think that happens all the time, man. I think that would even happen before this specific moment. There are so many people, even from the NFT cycle, when previous generations in CT would look at NFTs and say, that is so stupid. There's so many people who came into the space from NFTs because they saw the light when it came to NFTs. They thought that particular type of asset was so cool, so interesting. And those specific people will look down on memes, and even they will say, well, I can't do that. So I think that's just the way of the world. There'll be all kinds of investment opportunities, and certain people will just absolutely not touch certain ones. And yes, they will definitely go for the ones where they can run their models and have that kind of safety, I think. So
And they
I think also just looking at like the way those fundamentals are looked at, like every person's different. So they have a different investment thesis. They kind of invest based on different metrics. And I think like I'm very much like a fundamental, like it has to have like substance. I dabble in memes, but I find it very hard to pick them based off vibes and culture and all these things that are slightly less tangible. Whereas I think there are people in traditional finance that follow that same model. They're like, okay, well, this has a fundamental like use case. This is what this does. These are the cash flows that are associated to it. This makes sense to me. But on the flip side, there are people that are more psychologically mindset, have a psychological mindset more linked to just off vibes or cult or momentum or whatever it is over there that just associates and resonates. And I think one of the guys in the chat just actually brought up a valid point around meme coins. So eBrink said meme coins seem to be more of a reaction to predatory tokenomics by these protocols. And there is that anti-VC coin sentiment. And I think there will never not be that. So that will always exist. And there will always be people that want to go down that route. But it doesn't mean that it's going to be at the expense of another segment. So I think there'll be investors across both.
Yeah, I think that's a great point. Go on, Legendary.
I think I went to a birthday party last weekend, talked to a couple of normies, and someone there was like, look, I see all the meme action. I don't understand it. Obviously see the shorts, see the reels on Instagram. So I bought Solana. I was like, it happens on Solana. Meh. Solana might go up if this is an interesting sector. So I do get that. And I also partially agree with eBrink's comment on, being a reaction to predatory tokenomics by these protocols, the rise of meme coins, that is. But on the other hand, we are also like kind of simping for VCs. We are big fans when Mark Andreessen is following a AI-based meme coin. Everyone's like aping that, oh, Mark Andreessen just followed the project. But they might be onto something. And we're looking for every potential link to A16Z when it comes to building a narrative around a meme coin, or Wintermute is now one of the top holders of this coin. That could be something. So it's kind of interesting that we are in this dichotomy of disliking VCs, but still loving it when they put money in what is our bag. So that's a bit of a fun situation to be in.
Yeah, it's like we created this coin to smite the VCs, but we really, really hope that the VCs buy it and shill it to all of their clients. So we become the VCs. We're the real VCs now. We got in before you. In the end, that's always the objective, isn't it? Look, really interesting discussion. Need to get into this AI stuff. I know we've been touching on it all show so far, but we need a much more significant breakdown. Sammy, AI meme coins have gone crazy over the weekend. Just going to head straight over to you. What's going on with virtuals? What's going on with Luna? I know you wrote a great thread on this, which people should read if they want to read it as well. But give us a breakdown here and let us know what's going on.
Yeah, so I think there's a number of things that have happened over the past, I'd say even 48 hours since virtual. But just in terms of like, it all encompasses AI agents. Now, these are kind of individual entities like powered by AI that kind of have their own thought, and you would have seen them on Twitter. So Truth Terminal popped off a couple of weeks ago. That's one example of an AI agent in the back rooms. What is then put on Twitter is, I think that's a copy paste thing. Whereas now we're getting things that are actually connected to Twitter and also have the ability to kind of trade the wallets that they've been associated with. And that's kind of where virtual comes in. So virtual protocol, that is effectively the infrastructure that you can launch an AI agent off. So imagine Pump.Fun for AI agents rather than just memes. And that's essentially what this is. It's on Base, so it's just different to Solana. It had, I think, Brian Armstrong retweeted it. I think it's had Jesse retweet it. And since then, there's been other platforms similar to that have popped off, like Base Agent, which I think Red might touch on slightly later on. So in essence, Luna is the flagship AI agent that's on there. It's like this protocol has probably got recognition from Luna. It's basically a working prototype of what these agents can effectively become. They've got a Twitter feed. They've got like a video feed. You can even use Luna to pay it to do stuff and say stuff. And you can see in there as well, just on the screen. And this kind of popped off because people were seeing like, this is pretty insane, and it's connected to that. You can see the thought process of this AI in what's called like a back room, which is essentially like all the code, all the writing that's processing in real time, so you can see it all. And then it kind of repurposes stuff to Twitter, and you can actually see the tweets that it decides to put out on Twitter, which is pretty insane. And then it shames you when you sell and also commends you when you buy its token, which is pretty funny. But it's also I kind of feel a bit like obliged to buy more or a bit reluctant to sell. So it's interesting. It's almost like a KOL, like a proper KOL. Now to get access to this, you can swap. So you have to buy the virtual token, which is you can buy through the main DEX on Base, which is Aerodrome. You can either then buy tokens that are associated to specific AI agents on the virtual protocol, or you can actually create your own protocol. So I think we touched on that earlier on in the show, where you could spend 125K virtual to launch like a more advanced influencer similar to Luna, or you could pay a lot less and just literally launch an AI agent that has a token associated to it. And there's probably 1,000, maybe more now, that have been created, which actually acts as a pretty interesting token sink for the virtual protocol token, because that gets put into an LP for that individual AI agent and then locked up. So you're kind of taking that supply off the market, which is pretty bullish for the protocol token. And yeah, just on the screen now, you can see a lot of these AI agents that are being created that you can ape into. I mean, I bought some Luna, I bought some virtual. I think my only concern at the moment is you're seeing a lot of these other protocols come to market, like DAO Dot Fun or Base Agent. So my concern is that you're going to have a lot of that mind share and liquidity flow to all these other ones as like these AI agents proliferate the market. I'll use that term again, just so I don't know what other term to use, but they'll proliferate the market, and then it will effectively become a bit of rivalry. It's like, well, who has the best AI agent? Like what is it? Chat GPT 4.0? Is it like Llama 405? Or is it like what model is being used to train these AI agents, and what data is being put in there to make it kind of superior? And I think we're going to start seeing that over the next couple of weeks, months, maybe even the next like 6 months or a year. I think it's going to get pretty insane. And we're seeing that with A16Z and DGen Sparta at the moment, which are other AI agents that have been created outside of this, not within this virtual protocol, but elsewhere. And I think Brad or Ledger, you're going to talk to that. So I'll leave that to to be discussed separately. But that's just like an overall arching picture of what virtual protocol is.
Amazing. Thanks so much for that summary, Sam. I don't know whether if I have an immediate question. I don't know if Legendary wants to take this and speak to his experience with it last 48 hours, because I know he's been doing it as well. So what's the intention or hope for the user here? Like, if you're buying this token, or if you are like, what's your hope? What's your expected outcome? Are you buying the token just because you want it to go up, which is obviously a large part of what crypto stuff is going on? Are you buying a token so that you can work with the agent? What's the agent up to apart from streaming? It seems like they're streaming 24/7 and tweeting various things. Are they up to anything else? Are they doing on-chain transactions? Because that's what Red was speaking about with this based agents launch on Base, where you're going to be able to like explain what you need done to these agents, and they can do on-chain transactions for you. So just give a bit more context there.
So I think the actual transacting, I would push more towards what AI16Z and Degen Sparta are doing. So that's slightly separate to virtual protocol. Virtual protocol, you have the token launch that's associated to that particular AI agent, which you could see as like the value that AI agent is worth. I don't know if they can actually transact yet. I haven't seen them transact. I think no, they have actually. They've tipped people. So on Twitter, I've seen maybe a handful of tips go out. So I think Decentraland received a tip. So you have to have the address in your bio and you have to interact with it. And if you interact with it, you can receive tips from that AI agent. So Luna. So it is doing on-chain transactions. Degen Sparta and Degen Sparta AI or Degen AI and AI16Z. That is more going to be AI integrated with like trading. So it's kind of like a fund where they will essentially take a load of information, and then based on that information, they will operate transactions out of a specific wallet. So that's where that could get PvP between different AI agents, like which one's more supreme, which one's been trained better. And that's kind of the direction it's going. I think that's potentially slightly more advanced than what virtual protocol has done at this point in time, but it's not to say that it might not get there within the next couple of weeks or days even. It's moving at such a fast pace.
Interesting.
There's three approaches to what you want to do with virtuals. One is exactly what Sammy has mentioned. You have the virtuals token, where you need it basically to launch the AIs, to refine the AIs, and that is the play, that this is the token. This has the token sinks by using the protocol. Then you have the second layer, which is go for like the main AI on there, go for Luna, because Luna is streaming, is getting tons of views. Apparently has been streaming on TikTok for months and accumulated 500K viewers or followers there as well. And you can actually take a look at the character card and see what's going on there and see what Luna's programmed to do. And it's pretty funny. If you look at Luna's character card and the self-description saying, Luna is slightly schizophrenic, loves to explore 4chan, yada, 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 yada. And Luna wants to grow this to a $40.9 billion market cap. So this is the mission that Luna is self-described on in the character card. And you need to contribute to that to make her smarter. And that's the third thing. You have other AIs, other agents who are rising, who are falling, get contributions on that. So it's basically as Semi perfectly described it, the AI version of Pump.Fun on betting on that. And that is kind of your bet, that you will have enough successful AI KOLs who get enough traction to attract more money to the protocol and make either the virtuals token or the respective KOIs, love it, the respective KOLs, AI KOLs which are successful, go up in value as well. So that's the play for those who are participating in that, or the thinking behind that.
I like it. This has definitely captured people's imagination a bit more. Like, I feel like coming into today's show, there was more energy around these specific things. And I think that's felt the same for a lot of people. This is a tweet by Ryan Watkins, who's a significant fund manager. He said, on-chain AI agents are the first crypto XAI use case that's genuinely cool, even to those indifferent to blockchains. For many, it's a light bulb moment on the potential of a future agentic economy. For the first time, users can touch and feel decentralized AI. It's no longer just an abstract investment theme. As I've said before, these early use cases are crude, but that does not mean that the trend should be dismissed. The birth of agentic finance demands a reevaluation of the TAM for block space. Current assumptions may be undershooting by orders of magnitude as AI agents proliferate in the coming years. I guess that point translated is we are only estimating what the economic value will be on blockchains based on human activity on the blockchain. Whereas if you have to extrapolate out what the value of economic activity will be if each person has multiple AI agents doing various things for them, maybe that number should be significantly higher. He goes on to say, like DeFi in 2020, the most upside in percentage terms is captured when the new sector goes from a 1% chance of success to a 25% success, not a 25% chance to success to 100%. My bet is DeFi in 2020 is just about where crypto X AI is today. Interesting. Big thoughts there. Maybe a final one from you, Sam, before we touch on the DAO protocol.
Yeah, I mean, I think the potential is huge, and I think the connection between blockchain and AI has been solidified. And something that I've kind of researched in the past couple of days was just around this trust score. So the data that is fed into these AI. So with AI 16Z as a specific example, it receives token addresses and assesses the conviction of that particular alpha caller or whatever. And based on how they communicate and how they feed that information in, it then assigns a trust score to that particular person based on the outcome of that. So that to me is super interesting because you can then iterate based on that performance, and the machine then learns to then choose who to rely on, like which source to rely on more. And then of course you've got like, okay, well, the outcomes, and then it will make its decisions based on who it thinks has the best information. And that is like a superior form of like trading or investment thesis, or like a more reliable way of doing it. But having that iterative process is something that I'm finding super interesting. I think that's going to be a bit of a game changer. And having that on-chain like validation, it's like, okay, well, that person's verified. Like I know that trust score based on that person from that wallet.
Okay. Definitely got to dive into this more. Just a bit of a disclosure. I think multiple people on the team here have holdings here because they managed to get into it early, but obviously had to include this because legitimately headline making and super interesting to discuss. So we'll continue to follow this as the week progresses. Final point for today, final headline for today, kind of linked to everything we've just been discussing as well, because it has an AI component. Brad, the DAO Dot Fun has been going viral. One of the top DAOs was AI16Z, which we've just been talking about. It's got a market cap at $44 million. What's going on with DAO Dot Fun? Should people be interested? We've seen DAOs before. Why is this different? How is it different?
I think Brett asked me to take over because his connection is struggling a bit, so I'm going to do that one. So basically the way DAO Dot Fun works is, first stage, you fundraise. Creators can set up a fund. They have a week to raise the sole amount that they want to raise for that. If the raise is successful, it moves on into the trading phase. Basically, then the funds can be used. They can be deployed, can be used to buy meme coins or do whatever you want to do with the fund. And then the fund also gets the price attached to it, which is, and that's the absurdity of what we've seen, maybe 100, maybe 200 times above the net asset value. We've seen that with the Sequoia fund, which had raised, I think, 100K in there, or had 100K in assets under management, quote unquote, and was trading at 2 or was trading at 3 mil. So at an absurd, it only had 10K in there, my bad. So it was trading at 200 to 300x multiple of its net asset values. The also interesting thing is that those funds are not running infinitely. They could run for up to a year. And after that, the DAO wallet gets frozen, and the SOL, if there's any SOL left or if the profits left, get distributed back to the token holders. And as you said perfectly, we've seen that taking off because there was this AI16Z labeled fund that had Marc Andreessen's PFP in a robotized version, and basically was claiming, look, Marc Andreessen is the best fund manager in the world, but his AI version is better. And at one point throughout the day, on the Saturday, it managed to capture Marc Andreessen's attention. He reposted, he started posting that. That morning, it was at 4 mil, shot up to 32 mil, pumped all the way throughout the European night, to its all-time high at around 96 mil, which was such an absurd increase in price, and kind of links back to the discussion that we had before, that we don't like the VCs, but we like them when we are earlier than them in the space, and we like Mark to kind of repost that and share that. There's also been some criticism around the protocol. I'm going to keep this short because I'm wary of time that we're running out of it. There's been a take by Squiggly Hair, who was saying, look, nothing prevents the fund manager to buy a meme coin with his private account first, then with the fund, and dump it privately. Structure is identical to Grayscale. Everyone knows how bad it is. It's basically a closed-ended fund, far worse than ETF structure. Share prices, as we said before, can be massively inflated from the net asset value in the fund, and the trading fees are a Ponzi, just like Frentech. This is also a point where Brett was pushing back on that, who's like very familiar with, very deep in Frentech, saying that Frentech team was extracting from users. DAOs, the team that manages, might be extracting as well, but they are getting outside capital to be brought into the fund. So there is this distinction to be made. And I think that's important to keep in mind, that this massive discrepancy between the assets under management and the share price of the fund is there, and you're trading off the FOMO, you're trading off the hype of that. Was privately speaking to Confusion about that, good friend of the show, and also deep in the trenches, who summed it up perfectly, saying net asset value is just a meme. And I think that is the perfect description of it.
Amazing summary. Guys, we're going to leave it there for today. Great to be back. So much stuff going on over the weekend. Feels like we're really kicking into gear. We're going to be completely locked in the next couple of weeks, bringing you everything you need to know from the modern market. That is crypto, NFTs, and any other AI related protocol where there might be some opportunity. So have a wonderful day. Thanks so much for joining us. Thanks to legendary Bread, Sammy, and Funky on stage with us, as well as all of you for joining us. Have a wonderful day. Take care. We will be back tomorrow, same time, same place. Bye-bye.